Hello and welcome to the June 30th edition of the Gold, Goats, and Guns Market Report. My name is Tom Luongo. We've got a lot to talk about. Today we're going to focus on quarterly closes because today is the final trading day of quarter number 2, being the last day of June. I'm actually recording this early. It's late on Saturday night after investing.com, which must be on Greenwich Mean Time, has thrown up their quarterly closes for the month for all of the crypto assets. So this is literally the earliest I could do this. I'm just going to be really busy tomorrow, so I wanted to make sure I get this done now. And, well, I had the time, so we're going to do it a little early. And that means it should get to your inboxes earlier than normal. So with that said, let's get right to it. We've got a lot to talk about. All right. I want to talk about what I talked about in a blog post on Friday, which is I kind of ripped Peter Schiff a new one, and he deserves it. Peter Schiff is an interesting guy because, he was the first accepted public face of Austrian economics. He was there saying that housing was going to crash back in 2007, and they all laughed at him. And, he was right. Now, I don't know that he was right. I know that he just kind of got lucky that he was right, because he hasn't been good on timing ever since, and Austrian economics is not particularly good at timing. And having listened to Peter for a long time, I know that he's not really a guts and details kind of guy. He's good at making it look like he is, but he's not. And his antipathy towards Bitcoin borders on, frankly, the pathological. Same thing, unfortunately, I can say about one of my other heroes, Dr. Gary North, who also thinks Bitcoin is a complete Ponzi scheme because he doesn't understand it. And it brings up the important point. And I think with Schiff, he understands it because he takes Bitcoin on a site for his gold. But he's built a business around gold. And he's built a business around being that guy. And he might have built a brilliant business for last generation, for the last bull market. Technology changes the definition of money all the time. It's always done so throughout history. It's nothing new. And this is not me getting off the gold bandwagon in any way. Name of the thing is we're not gonna turn this into, Bitcoin booze and blunderbusses. This is still gonna be gold, goats, and guns. As we were joking the other night on the live stream. But you have to acknowledge at this point that we live in a digital world and we live in a global economy, and that global economy is not going to become less dependent upon trust and speed. It's going to become more dependent on it. It's going to become more dependent on the electrical grid. It's going to become more dependent on hardened networks to ensure that information flows. If I have a worry at this point, it's that I spend too much time listening to the suspicious observers guys and wondering, when the next coronal mass ejection is going to take out the grid. And then, as we were talking about on our Slack channel yesterday, if that were to happen, none of the grid transformers are made in the United States anymore. They're all made in China. And then Peter Schiff will be right. We'll need gold. But even digital gold, why would you spend digital gold? It's the same reason why people don't spend their Bitcoins, why they only trade them amongst themselves or hold on or hodl them, right? You stack your gold coins and you hodl your Bitcoins. And there's a reason for that. It's because of Gresham's law. We know that these monies are undervalued. We know that these assets are undervalued in a comparison to the US dollar, or the euro, or the Australian dollar, or the Thai baht, or whatever. We know this inherently. It's why we spend those crappy currencies and we hold on to the good ones. That's why the dollar really isn't money. It's a currency. It's designed to be a currency. It's designed to be spent. It's not designed to be saved. It's not designed to be a unit of account. It's designed to be a thing that circulates. No one cares about which particular dollar you own, which particular serial number of Federal Reserve note is in your wallet. No one cares. One is as interchangeable as the other. But Bitcoin's different. We know where everything is if we want to. And that means we can prove who owns what. Because who has the private keys? Possession is 9/10 of the law. Owning the private keys is the law. And it's something that you have to wrap your head around, that money can be decentralized and electronic and strong. And watching the quote-unquote heart-stopping volatility, which frankly is for other people, because I checked my pulse when I saw that Bitcoin was back down at 11 grand the other night, and I'm sitting there. We got done playing a game of new Star Wars board game, by the way, really cool, called Outer Rim. I got to play Boba Fett. I nearly beat Han Solo to be more famous than him. It was a good time was had by all. And I got done with this game, and it was like, I checked my Blockfolio app on my phone, and I went, oh, look, Bitcoin's at 11 grand. Huh. When I was driving into town, I was thinking about, whether or not we were going to get the highest monthly close ever at over 13,850, which I'll go over in a couple minutes. I went, oh, that's interesting. What do you guys want to play next? Cool, let's do it. I've been in gold and crypto so long, I just don't even get upset anymore. I don't get upset when it rises. I don't get upset when it falls. It just is what it is. I like it when it rises. I'm not crazy about it when it falls, but it's going to do what it's going to do. It's why I don't trade. It's why I don't actively recommend that you trade, but I know some of you are, and you make good livings at it, and bonsai, and you're better men than me, better men and women than I am. But I don't do it. I don't do it for a reason. I don't do it for the reason that I'm looking at right now. Because once you have, one of the things that you realize is that when doing this, and I've been doing this now 6 years since Newsmax first hired me. One of the things I've had to learn how to be is flexible. I've had to learn how to not be dogmatic, and not be, and understand that you have to dig into the details of the individual cycles, and that time is as important as price, and is as important as theory, and it's as important as philosophy, and as important of any of those things. You have to be willing to drill into those things as far as you're capable. And I know where my niche is. I know that I know that I'm not a day trader, and I know that I'm not a short-term cycles guy. I know that I'm a more macro guy, and that's what I do, and that's what I try and give you all the bigger picture for, so that you can drill in to do the work that you need to do and to make the decisions that you make. And I feel bad in a way for guys like Peter Schiff, and to a lesser extent guys like Mike Shedlock and Bob Wenzel and Gary North, who still refuse to get it. They're all very smart men whose opinions on a lot of things I greatly respect, except Bitcoin. They just don't get it. And they're not going to. And there's no changing that. And I'm telling you, it's going to end badly. And it makes me angry, because I take the responsibility I have to y'all, very seriously. Even on days when I don't want to do what I have to do, get up, and there are days when I get up and I'm arsed to want to look at the market or read the headlines or anything else. I get just as frustrated and down and depressed and, as everybody else. I have my good days and I have my bad days, but I take my responsibility to y'all very seriously. And I would be remiss to not try and help you understand what has been the best performing asset class of the last 9 years, and could possibly be the best performing asset class of the next 9 years. I would be really remiss. Now, moving on. I think you all know what I mean when I say that in relation to Peter Schiff. He has an interest to his customers. not to his bottom line. And that's what makes me angry. All right. And that's why I called him out. Not that it'll matter. He won't listen. The G20. Let's talk about it. Some interesting things have come out of the G20. Not the least of which is that Trump finally did what he has needed to do from the beginning, which is back down. Back down on Huawei a little bit. The Chinese have pledged to buy more of our soybeans or whatever. There's not going to be a soybean harvest this year in the United States to speak of. There's not going to be a corn harvest to speak of. My wife's up in Ohio now in the middle of Amish country, and, corn's, ankle high and brown. They can barely get any hay. I mean, I think just got off the phone with Camille before I hit record, and she was telling me that they were finally able to get some hay, cut some hay and let it dry out. And they cut hay the other day and thought they were going to have 4 or 5 days worth of really nice weather, and then it rained on them. They were able to bale some of it, at the very least. So it's hard. It's going to be a very, very miserable year. And I showed you the charts of corn and wheat the other day, a couple weeks ago. They haven't backed off any. They haven't moved much, but they haven't backed off any either. They're definitely in breakout territory. And so, China agreeing to buy more soybeans, like, well, that's fine. You guys aren't going to have any soybeans to sell. So, okay, cool. We'll buy. We can buy Intel chips. We can buy ARM chips again. Great. Some people finally twisted Trump's arm and explained to him just how bad this would be. And I'm sure that part of me, the real cynical part of me, says, damn well that guys like Mnuchin are telling him to do this so that their friends at Goldman can short Huawei and make a killing. You do realize that that's the way the game is played, right? And that's what makes me sick to my stomach. It just makes me sick. It makes that, and then we all sit here and try and figure out what the hell this all means. And what it means is exactly what it looks like. People are talking their book and making money because it's all just a bunch of corrupt crap. Last thing I'm going to show you today, on top of all the other quarterly charts, is oil. In the face of Trump backing off on the trade war, the Dow will probably spike tomorrow. Dollar might even get hit a little bit. We're probably in the false move down on the dollar and the false move up on the euro. I saw some tweet today, some guy saying we're going to see $1.30 or $1.40 on the euro. I mean, if that were to happen, oh my God, Europe would collapse overnight. Anybody thinks that Italy can handle the euro at $1.30 or $1.40 and the banks actually survive for 15 minutes is out of his mind. It's literally out of his mind. But, fine. Okay. Run your correlation charts. Be a quant. Fail miserably. Okay. Oil doesn't look good, even after, the spike from last week. So if we're not going to war with Iran, and the trade war with China might be off, and China made it abundantly clear that they're going to buy Iran's oil, and the Europeans are moving forward with Instex, the special purpose vehicle to get around the sanctions to allow them to trade with Iran. I don't know that the Europeans are ever going to buy a barrel of oil through Instex, but if they do, it'll be really interesting if they did. I don't think they will, but they're going to virtue signal that they are. So we'll see. Iran is putting Europe in a really deep bind, and Europe is in serious trouble. They need the energy. They're net energy importers, and there's only so much to go around. And you can only take so much of the ultralight sweet stuff that we produce out of the fracking fields. It's just, there's a finite limit to how much of that stuff can actually hit the market. It's too light. It has to be blended. It's not really good for making anything other than like JP4 and gasoline. And we don't even use it to make gasoline because we still get all of that from the North Slope to feed the refineries on the East Coast. We have one less now, too, by the way. I don't know if you guys remember that the day that the Gulf of Oman incident where the 2 tankers were attacked, which more and more looks very likely. I saw something the other day that it was the Mujahideen al-Haq, the MEK from Iran, along with the Saudis, set that up to try and frame Iran. No, I don't want anybody should be surprised to hear that. But on the same day, there was also a refinery fire in Philadelphia, and that refinery is going to be scrapped. It's not going to be rebuilt. Or it's going to be scrapped. It doesn't have to be rebuilt. It can't be salvaged. At least that's what I heard the other day. So, if anybody knows that the price of gasoline spiked 18 cents in the last few days, that's why. But oil, despite all this stuff, oil looks heavy because the global trade war doesn't look good here. The global economy still doesn't look good, and even with China and the U.S. kind of maybe not being quite so hostile with one another, I think Trump is going to have to back off almost completely here if he wants to salvage any, what's left of the of a good economy coming into the election season. He's wants the Fed to lower rates to boost the stock market, make him look good for political purposes. Is what he wants. He's being a typical president who wants lower interest rates when you come into election season, because by the time he's thinking conventionally that lower interest rates will mean more growth, more GDP growth, right at the time when the election is, looking the strongest for him. Unfortunately, it's a signal of weakness. The central banks don't have any answers. So we're going to watch oil, copper, natural gas prices carefully to get an idea, shipping prices, obviously, to get an idea of what's actually happening in the global economy, more so than even the monetary assets like cryptos and gold and the rest of that stuff. It's really going to come down to the big ones. It's going to come down to Dr. Copper. It's going to come down to silver. It's going to come down to oil. It's going to come down to natural gas. Okay. So let's talk about gold. Let's rejoice a little bit, because not only did we get the breakout in gold last week, which was very significant, but we got the quarterly close that we were looking for, and we got a quarterly close that was about $35 above the top of this resistance band. This resistance band really stretched from like 1355 to 1375. It's all in this range. I mean, look at all these quarterly closes that couldn't really breach. I mean, when you really back down, when we really look at it, gold hasn't closed on a quarterly basis about 1310 in like 7 years. Or 6 years, going back to like 2013. A long time. We've got really good pot odds for this quarter to break the previous high, which I will be surprised if we don't. I'll also be surprised if we don't get a correction back to the breakout level, that 1360 area, that we don't get some kind of, retest of this resistance zone, which is now support, which they confirm that it is a firm support. Because if it does get confirmed that way and it has firm support, then it's Katie bar the door. We're going to $2,000. So, of course, we could have another false move down if the Fed doesn't raise lower rates in July and holds off till September. We could have some near-term weakness. Actually, that could be the thing that actually gives us the retest of that area, which could even break through that area down back into the 1310, 1320 area. But again, that would not hurt this uptrend in any way, or hurt this rally in any way, because as long as we don't violate the 2019 low as of right now, which is around 1260, everything should be fine. As long as gold on a monthly and week, when you look at like the weekly chart, as long as you're constantly seeing higher highs and higher lows, don't worry about the numbers per se. I mean, you can if you're a trader, obviously, but from a macro perspective, it looks good. And these, this back-to-back reversal signal thing that we got here is everything you need to know. This was a false move down in gold in 2018. And now in 2019, you see why I use that term. That term's really powerful. I credit Martin Armstrong with it. He's right. And I really, the minute he explained it in that way, I'm like, oh my God, that's so absolutely right. I get it. Thank you. And so I give Martin shit every once in a while for some of his things, especially his antipathy to Bitcoin again as well. But again, it's just guys, dominant paradigm guys. They can't see outside the box. All right, so in a reference to the man on high castle that nobody will get, title of this slide is "Bring Crude, Lying Heavy." So, big, huge run in oil over the course of 3 years, from 2015 to 2018. But then we got a price reset. And this past quarter, well, we broke the previous high, which would be almost impossible not to, given this bar. Really didn't get much of a bounce here. I think oil prices are going to find I think $80 or even $85 here, I think is way too high. I think we're going to be looking at oil prices in this range for the foreseeable future, maybe lower. If there's no war with Iran, that war premium that pushed oil up a few bucks previously, it's going to see it collapse back, or not collapse, but slide back down towards $60 Brent crude. I would just be very shocked if it doesn't. Demand is slackening off. We're getting housing start numbers. I think we're particularly good here in the United States. So it's time. It was a credit-fueled, incredibly long, shallow expansion. And it's going to slow down. And China's slowing down because of the changes in the tariff structure and all this stuff. It's coming. Okay? So don't be surprised. Again, Trump could go to war with Iran. We go to $150 a barrel. I don't give that very high odds, given what I've seen out of Trump in the last week. Between Iran, between calling off the airstrike on Iran on Friday and his performance at the G20 so far, I don't know. I don't see it. I see a lot of bluster, and I see a lot of bluffing, and I see a lot of posturing, and I see a lot of fronting. But when push comes to shove, money talks. Donald Trump knows that. And there's a lot of money out there that does not want him to continue on this path. That means you have to start pulling back from this path and take the best deal you can get. So I think that's what we're going to see. And I think everybody who's on the other side of the trade knows exactly what Trump's MO is. And therefore, as I've been saying for a long time, the art of the deal doesn't work on Russians. If so, there would be a Trump Tower Moscow. Bitcoin. Let's talk about it. Huge week in Bitcoin. This tail here is all Wednesday of last week. Literally from 12 grand to nearly 14 grand happened over the course of a couple of hours in both directions. We closed the month here in the quarter at 12,028. That will not be the highest monthly close or quarterly close because this is December's bar. Where is it? Or is that January's bar? Ooh. No, I'm wrong. This would be the highest quarterly close of all time. That's significant because this peak happened in January. Right? So, but not the highest monthly close of all time, but certainly the highest quarterly close because this would be the quarterly close in March, and this would be the quarterly close in. No, this isn't March. This is March. That's January. This is December. So this is the highest quarterly close of all time, and that's only 10,000. This is 12,000, the highest quarterly close in Bitcoin's history. It is not anything to sneeze at. It also means that given the high tail on the top of this bar, just like the ones that we saw in January and February of last year, that Bitcoin's got a pivotal couple of months coming up. What do I want to see? What I want to see is this 10 to 12,000 range hold, and we trade between it. We trade in it for a couple of months, weeks minimum, preferably a month, and then just wait for another catalyst to spike higher. Consolidate these gains, test these gains, get some people comfortable at this level. Let the market flush out some spec longs and get real money in here at these prices. Because that will build a platform for a retest of 20 grand later in the year. That's what I'm hoping for. What I'm looking at may actually be that. I'm hoping that that's actually what I'm looking at. But here's I can't show you here because it's a monthly chart. But if you look at the weekly chart, it's pretty, well, actually you can almost look at it. This area down in here at around 8,500 or so is where you want to start looking. There's a lot on the weekly chart. It's really obvious that there's a lot of there's a couple of very strong, important peaks in here. So 8,500, even 9,500, like this whole area in here would be a good area for Bitcoin to correct back to before going higher. Peter Schiff will go, I was trading at 14,000, I was only trading at 10. Well, you know. What do you say to somebody like that? Troll, don't feed them, right? So yeah. So these are your important levels. And if July we were to close above this 13,850 level, well, again, guess what? Aside from the fact that, you know, as long as you get a close above, as long as you get a violation of the upside here, which is around 13,925 or so, as long as that happens, then you're fine. Then this is still an uptrend, and even a close below this peak will be fine. But you have to get the violation to the upside as well. But I don't want to see that. This rise needs to be consolidated. The market needs to get some bearish activity in it. It just needs it badly. But it's been a wild ride, and I know a lot of you made substantial amount of money over the course of the last 3 months, and I can only say that I hope that I helped you get there. That's all I can say, because that's my job. So, okay. As we take our a trip across the cryptos and looking at the way they all broke out in different ways, aside from the fact that this consolidation thing is way off. I reset this chart before I didn't. I'm sorry. This chart is not well done. I resized this chart and didn't properly resize this shaded box area. But what's important here is to look at what happened with Monero. Is very similar to what happened with Bitcoin. One big bounce, bad downtrend here. Really, I think this is what you would consider a false move down. Going back to the Bitcoin chart, it's really obvious that $6,000 was meant to be the floor. This dropped down to $3,000. It was way overdone. So when something is way overdone like this, this is not untoward when this should have never happened in the first place. So same thing here in Monero, except that what happened, of course, is that you got a strong 1-bar reversal. This is a weekly chart. And then trading in a textbook consolidation pattern within the confines of this bar, for the most part, all the way out until you get to the breakout above that level. And then it's off to the races. And again, trailing similarly to Bitcoin, except not quite. This is a noisier chart here. I mean, this is a higher, these are, the lows were violated here more often. You've got engulfing bars. You've got all sorts of ugliness in here. But then, boom, it traces higher. This bar isn't all that great. But this was the week, I think, that Bitcoin was down. So that Monero spiked and then still closed marginally positively is actually interesting. But again, at this point, it's just noisy. And this week's a bearish engulfing bar warrants consideration. Relatively orderly, except for a couple of, except for when Bitcoin wasn't. But this bar is a bearish engulfing bar. It's not a reversal signal. We avoided that this week, but it's going to be interesting to see what it does going forward. And it's going to depend on what Bitcoin does. If Bitcoin trades sideways for a couple of weeks, would not be surprised if Monero corrects back down to around $80 at all. You've got lows here in the 80s. Makes sense. Here, you got a high here, you got a low here, you got a low here, a couple of closes, got a close in here. It's fine. So I would not be surprised by that at all. So from correct from 120 or so back down to 80 before moving higher. Wouldn't surprise me. Could use it. Would be good for it. Again. Okay. But, why is, the one last point, so why is Monero doing this? Because Monero is a good privacy coin. And in the long run, Monero will have, not now, but in a couple of years' time, Monero's inflation rate is set to drop to almost nothing. And when that happens, Monero is going to get really scarce really quick. And for every one of you that's read this month's issue, you'll know what I mean by that. That word scarcity matters. That word scarce matters. Because it's the argument. It's now becoming the dominant, in my mind, it becomes the dominant argument as to why cryptocurrencies are acting as vessels for capital flight and safe haven asset transfers, because they are scarce, and because relative to the saved or the hodled supply, the inflation rate is now beginning to, on many of these coins, starting to drop very, very rapidly. And Monero in particular is one of them. That's why we need to watch Monero for this reason. Like Zcash, for example, is still in a massive inflationary phase. I still don't understand why the coin trades as high as it does. And we'll talk about Zcash probably on Wednesday. But Monero is has something going for it, right? And as one of the premier privacy coins, it's something to really consider. What it's going to do in the long run, and if cryptos become something that the governments try to frown upon people owning, the privacy coins are going to become more and more interesting. Monero holds a very interesting place in the marketplace for that reason. And then, by 2022 or so, I think its inflation rate drops below Bitcoin's. So, all right, last chart of the day is the Dow. As always, we're going to look at the Dow quarterly chart. Interestingly enough, these numbers dropped this quarter, especially the range. The average range on the Dow dropped by almost 100 points. Here's the thing to think about with the Dow. So we had our big down bar here that was a 1 bar reversal. Then we get an inside bar, which tells us that was a trend change. That generally a harbinger of a trend change. But then we didn't get a new close above the previous quarterly high here in Q4. We did not violate that new high, and we did not close above it. So this is not a 2 bar reversal. This means that the Dow may be setting up a bull trap, and it may be setting up a sideways trade for a little while longer. That it's not ready to break out. It's like gold wasn't ready to break out for nearly 3 years. Well, guess what? The Dow is not ready to move higher. There's just too many bears that don't understand the dynamic yet. They don't get it yet. They don't get that the Dow. I put it in my article for Money and Markets this week. I said, why would you buy a German Bund trading, a 10-year German Bund trading at negative 0.32% when you can buy AT&T for 6.9% yield? Would anybody like to explain to me why I would do that? And when you put it in those terms, the Dow makes a lot more sense than a German Bund. Even if you just take the Dow's, yield, it's yielding a little over 3% still. I think DIA is still paying just over 3%, which is what we have in the guns portfolio of the newsletter, as a hedge against falling gold prices and a falling dollar. All right, so there you go. So no reversal here on the Dow. So watch Q3 very carefully. It's going to be interesting to see. But then again, we just got a headline from Trump that may shatter that. We may shatter 27,000 tomorrow. We may, tomorrow may see 27.5 because of this, because of the way the markets have been trading. So I don't know. We'll see. I haven't watched Dow futures tonight. I don't know, but I will not be surprised. And it won't matter whatever they're doing tonight at 10 o'clock on a Saturday night will not matter by the time we get down to, they're open. What am I saying? It's Saturday night. They're not open right now. I'm thinking this is a Sunday night that they'd be open. Market would be opening in the morning. I'm a little tired, just so you know, guys. So with that said, I think with that faux pas, I think I should end this now, and I should go, and I should let you all have a good weekend, and I will talk to you soon. As always, I do appreciate all of you being patrons. I can't do what I do without you. It's incredibly important, incredibly gratifying to know that I am capable of doing this as an independent person. The market is beginning to move our way. So we've built what we've built, this community that we've built at this level during a bear market. things are going to change once it's a bull market. So, with any luck, fingers crossed, all that. I'm not going to bust my hand patting myself on the back or anything. Tomorrow's another day. It means tomorrow's something else I got to write. So, you guys take care. You have a great, great weekend. We will talk soon. We'll talk Wednesday. Keep your stick on the ice.